as we know, what happened during the pandemic, we were all stuck at house. They printed $7 trillion, sent money to everyone. Since then, actually, people have been hoarding that cash, right? Most of it has gone into the ETFs, obviously, in the market. But there is a put, actually, for the stock market or for other assets, okay? That's called the total assets in money market funds. I'm sure all of you know what money market funds are. I'm sure if you have a Robinhood account, you get APY of 4.5. You were getting 5, now it's down to 4.5. It's going to go down to 4 shortly because the Fed is cutting rates. So Robinhood will lower the rates on that. If you have a Robinhood Gold account, you're getting 5%. I mean, is it enough to save your butt from inflation? No, but it's better than nothing, better than zero that you were getting for 15 years under ZIRP, right? Well, we're almost hitting $7 trillion in money market assets in this country. 7 trillion. That's a lot of money on the sideline. What is that money going to do? Is that going to come into Bitcoin, some of it? Is it, or ETFs, stock market? Because the lower the rates go on the money market funds, it's going to look for a return. But one way or another, the net assets in the U.S. money market funds have hit a record of 6.75 trillion over the last 5 years, which started with the pandemic. You guys can see it right here in the chart right here, this takeoff right here. People started, saving money in money market funds, which is great. Over the last 5 years, it has doubled. Since the Fed starting raising rates in March in 2022, 2.2 trillion has flowed into these funds. Even as the Fed is cutting rates by 100 basis points, capital is still flowing into money market funds. Well, look at it. I mean, look at this chart with the circle I put on the right-hand side there. We are right at $6.75 trillion in money market funds. That money is going to chase return at some point, right? If the Fed keeps cutting rates and consequently the money market rates start going lower, that money has to look for a return. And that money is going to come out of money market. It's going to go somewhere. Imagine some of it goes into Bitcoin. I can imagine some of it goes into some stock ETFs, individual issues or whatever not, or real estate. So there is a lot of firepower on the sideline. The firepower is going to be used at some point, or people are just going to hoard it, right? And I don't know. I mean, people seem like hoarding is the right thing. I don't know if it's the right word or not, but look, they're getting 4.5%, 4% on a money market fund. What is our inflation rate in this country? It's not 2%, like the government gaslights you and tells you about. It's about 6, 7%. So nominally, you're still losing some money, but it's better than, losing 6%. You're just losing 1%, 1.5%, because the currency is being debased. Currency is losing value every single year. When I say currency, because people say, Sergio, dollar is as strong as it's ever been. Yeah, because it's the global reserve asset. I get that. But that's not the issue, though. The buying power of your dollars is being lost by 6 or 7% every single year. That's because of the debasing of the currency. That's because of us printing and spending. That's because of the national debt. All these things make a difference. Otherwise, look around you, people. Look around you. Look at all the hard assets. Real estate, all-time high. Unaffordable, I get it. All-time high. Gold, all-time high. Bitcoin, all-time high. Stock market, all-time high. Proof is in the pudding. And the 7 trillion may start chasing some of that. Now, that may be the top, but I doubt that all of that is going to go into the stock market or Bitcoin or any other asset. But there is definitely a put with that $7 trillion in in money market funds.